But let's turn our attention to KIMS. The hospital major recently entered into a lease agreement for a super specialty hospital in Bengaluru. It also entered into an agreement for taking land on a 99-year lease for a new hospital in Thane. That was for around 500 crore rupees. To discuss this, how the occupancy trends, expansion plans, and what do they expect from the upcoming budget? Well, we have with us Dr. Bhaskara Rao, the CMD of KIMS, who joins us on the show. Hi, Dr. Rao. Good morning, and thanks a lot for joining in. Well, take us through the first piece of news, the lease you have got into with the super specialty, for the super specialty hospital in Bengaluru. Could you give us the timelines? What is the potential revenues from this particular hospital?
The one which we had taken in PES on a long lease,
Yes.
we are about to start by the third to fourth quarter of this year. And almost it will be done by next 6 months. And we are very happy that we are getting on a lease and a revenue share model with a asset-light model. So we have a good track on the doctors who are showing interest to join into our group. With that, I think we will be doing very well as we anticipated. And there is a lot more gap in that micro market. So we hope we will definitely do very well.
You want to give us any numbers, potential revenue, sir?
So it will be definitely, it's very early to stage once we start and the type of consultants which we are going to do. Maybe what we are looking is in the first year, less than a year, we will be break even in our financials are concerned. Both EBITDA zero or maybe EBITDA positive, may not require a good heavy loss funding in the first year itself. That's what our aim.
Right. No, this is, so Mr. Rao, hi, morning, Prashant here.
Yeah,
so you were also working on new hospitals. I mean, there was a 400-bed hospital in Bangalore, which this is different, right? I mean, the one that you're talking about now.
Yes, there is two. One is in the Electronic City, which I was talking to about this PES. There is a education institution. They started a medical college. In that, we have about 400 beds, a super specialty block we have taken on a revenue share basis. With that, because it is becoming an asset-light model, and we are very, very confident that we can able to deliver what we are anticipating. And as I mentioned, that in the first year itself, we will be EBITDA positive. Second one, we are starting in Mahadevapuram, that is in Soul Space, which we have taken a building, and that is also going to commence from first of last quarter of this financial year. And we are very, very confident that that is also going to do very well because the consultants are showing a lot more interest in this group, and the revenue, the doctors' participation in the asset also will give them a good incentive basis to join and stay back and feel that is their own hospital. So with that, both the units in Bangalore, we are very, very confident that in the first year itself, we will be break even.
So by the end of this year, what will be the total bed capacity, sir, across the company?
So as of now, the 3,000, maybe another 1,500 beds we are going to add. 400 in Soul Space and 400 in PES, and another 300 in Nasik. Maybe another 400 is coming in Bombay. These are all the things. Maybe nearly 1,500 to 2,000 will come into the new on the existing beds.
So 400 beds in Bombay, you said. Any more capex that you have planned in Mumbai? I mean, this is
that is
a lot
in
of
Thane.
Okay.
Thane, actually, we already put the capex. Most probably by January, February of next year, we are going to start commencing that unit. With that, even though we have this is the full capacity of 400 beds in each facility, initially we may be opening about 200 beds and 150 beds. In a 1 year, 2 year period, the entire 400 beds will come into occupancy.
Okay.
Operation.
Apart from Thane, anything in the main Mumbai area, because a lot of your peers are entering into this space as well.
As of now, we are looking into Thane only once because everybody is will be very cautious to get into 2-3 hospitals in Bombay without showing a good progress in Thane. We may not be able to go. We are looking at opportunities, but we are evaluating those things. But once we are confident that Bombay market, what we expected, if we can able to deliver in Thane, definitely we look for another 2-3 places in Bombay.
Okay, and
There is
this
a great
300
potential.
beds, sure. Sir, you spoke about 300 beds in Nasik that you're adding, right? That happens
Yes.
when? In this quarter, or you're looking at the timeline over the next few quarters?
No, we are going to start by end of this month or maybe first week of July, August. Commencing, all the doctors are on board and everything is fine. Just waiting for some statutory things of. Once it comes, we are on the job.
And this 1,500 to 2,000 beds that you will be adding, say, in the next 18 months, right, or so, what does it
Yes.
take your total bed capacity to?
It will go around nearly total bed capacity will be around 5,500, but operational beds will be around 4,000.
Got it. All right. 5,500 operational beds at around 4,000. In the past quarter, Dr. Rao, you had a couple of issues, with regard to the occupancy. You all were doing some kind of activity at one of your hospitals, which explains why the occupancies did come down. Has it got back up, and what should be the average for this year you're looking at? And also on margins, I think there was a one-time 10-12 crore hit that we saw in the past quarter. So what is the steady state margins we should be working with on both these two, occupancies as well as margins?
See, last time the occupancy of the last quarter is one of the facility which we are shifting. That's why there's a little bit delay, and also the operational efficiency has improved. The ALOS has come down. In turn, the average revenue per patient has been increased. With that, I think the occupancy rate has come down. Otherwise, everything is fine. And then the elections and the rainfall in Andhra, which disturbed a little bit. I think right now, whatever is the one-time expenditure, because all these things we are recruiting people in the management and all, we are putting on to KIMS main listed company. Now we have been segregated and all those things, so that will be able to take that rearrangements of these financials, and this definitely the occupancy and the financials and the cost cuttings have been achieved in this quarter. This quarter will be much better than previous quarter.
And this year perhaps, so for the year, that's FY25, a bit operating profit should grow between 15-20% for the full year?
15-20%, yeah, definitely it will go up to 15%. That because we are also adding few more hospitals, which may not be able to generate any EBITDA,
right?
But the top lines will be better.
Okay.
Like Nasik.
Of course. What about price increases, sir? I mean, I don't think you've taken any price increases over the last couple of years. Are we to expect one, this year in 25?
We are very, very cautious about on the price increase, because we will try to achieve adding new therapies and as well as the volume base. And certain areas this time we are going to increase price hike, and we'll keep on not in a full length for all the areas. We don't increase the price. Where we see in the market there is a lot more gap, that we'll be able to increase a little bit. Still, we want to keep little lower than our peers in the market.
No, I take that point, but for the cash portion,
we have been increasing on certain areas.
Okay,
this year.
So right. So could you tell us on an overall basis on the cash side, what is the price increase amount to on an overall basis?
See, it will increase about 2 to 3% on the cash and insurance prices concerned.
Just the cash side, sir? What will be the increase?
2 to 3% of the top line.
Okay, all right. When is the last hike that you took, sir? What was the last hike?
2.5 years back.
2.5 years back. Okay, got it. We'll leave it there. Thank you very much, sir. Appreciate you joining us and good speaking with you here on CNBC TV 18. Good luck